Marvell is a leader in custom AI chip build-out, but are they still a buy after their recent announcements over the last couple weeks ahead of earnings? Let's take a closer look on today's deep dive on Marvell. Today, we're going to be taking a deeper dive into one of my favorite stocks, as my subscribers and followers on Twitter know, Marvell. They've made a few major announcements here over the last month. Some good, some not so great. And we're going to take a deeper dive into why this may no longer be one of my best holdings. So let's start off just here on the investor relations page, and we can take a look at, there's some nice announcements, but we're going to start off with the sale of the automotive Ethernet business. This, in my opinion, was a great sale. This business was growing low single digits to flat, was no longer a core growth driver for Marvell, and they were able to sell this business for 10 times revenue. That is a smoking deal, especially when you consider it to the price that the Marvell stock is trading at with their current expected growth rate of 40% this year. So this was a nice, exciting sale, hoping that this $2.5 billion can be used to pour gasoline on the fire that we thought was the growing AI data center business. The other announcements that happened was the change of its board of directors. This isn't something that I usually highlight or take too deep of a dive in, but it was a little unusual to have two board members, Michael and Bob, who have both been on the board for 9 years, to choose not to be elected again at the upcoming shareholders meeting. And we take a closer look at these two individuals. Michael is a former Ernst & Young. He's on the accounting side. So really he was probably highlighting and bringing into the board the accounting and the audit capabilities. So, don't love to see people who are focused on the numbers leaving the board, but these changes do happen. But when we tie it together with Bob's exit, Bob also has an accounting background, but he was bringing some other historical skill sets to the board because he has been with Micron and other tech companies. As we can see over here on his LinkedIn profile, he's been on multiple boards, including Micron, Marvell, and FireEye. But the part that kind of gives me a little bit of concern is we lost an accounting board member, and then Bob left, and he was the chairman of the compensation committee. So two people focused on accounting leaving the board could be a little small red flag for us to want to take a deeper look at what could be going on. And then Marvell really surprised everybody in the last week. Earnings is coming up at the end of May, and they announced that they will no longer be having an investor day in June. This is a big surprise to the market and to myself as an investor. And the part that I really didn't like was they used the saying of current uncertainty in the macroeconomic environment. A lot of people can throw this stuff around right now as an excuse with what's going on with Trump and trade. But when it comes to Marvell and the other people in this industry, we've already heard from some of their competitors when it comes to the data transceivers like Coherent, Astra Labs, Lumentum Holdings. They all reported good earnings and provided good to great guidance on their future business. So what's going on at Marvell that they no longer can have an investors day because of uncertainty in their business? Their major customers, Meta, Microsoft, Amazon, Google, have all confirmed or raised their CapEx guidance for the next 12 months. So something here isn't adding up. And I want to highlight a recent appearance by Philippe Lafont on the All In podcast, where he discussed the AI build out and where it's going as well, which I think also gives us a little bit of concern about Marvell.
Tokens greater than tariffs. Tokens to an AI model is like fuel to a car or electricity to a computer, right? Microsoft said that in their Q1, they processed 100 trillion tokens, 50 trillion alone in March. And so the tokens are really going basically vertical, which is probably because of these reasoning engines, which are much more sophisticated and require more compute power. It's a bit unfair for Trump, but the market did not just go down because of tariffs. If you remember, it went down because people freaked out we're in an AI bubble, AI is not really working, what's the ROI on AI? That was maybe a third to a half of the problem. And I think what Microsoft said is like, CapEx is going up and everybody has a gigantic shortage of chips right now. That I know for sure from all of our private companies, public companies. There's a shortage of chip, a shortage of compute power. Look at the next year or two. At some point, tariffs goes away. Trump makes this big deal with deregulation. The tax breaks sort of cancel out the tariffs. We move on. And what are we left with? We're left with tokens. All these people that say, oh, this is the end of American exceptionalism. I almost wanted to say, no, you guys are wrong. This is the beginning. Tokens greater than tariff.
So there we have it. Once again, why do we have uncertainty occurring if there's a shortage of chips, the AI build out, we're not in a bubble? So why are we not getting clarity from Marvell? And ahead of earnings coming out, part of this announcement was they also reconfirmed their earnings and said, hey, we're going to meet our current guidance. So we don't really have an opportunity for an upside surprise into Marvell earnings, because if they came out and gave us a great earnings announcement and then great forecast in the future, that would conflict with what they just said in this press release. So coming into earnings, I don't see a lot of upside ahead of us. And in fact, when this was released on May 6th, the next day, there was somebody who put on what I would call the black swan hedge, worried about possibly accounting irregularities. But I don't think we actually have accounting irregularities, because they would have said something in the recent press release if they're going to say something about those things. But this here, buying this 40 strike put, as you can see in this article, this is a black swan event. This trader doesn't actually think that they were going to get down there, but they probably have a very large Marvell position. And this was a very cheap hedge in case Marvell says something bad on their upcoming earnings call. So with this in mind, how am I handling my large position in Marvell ahead of earnings? And what do I think somebody else out there might want to do in this market? I've put together 3 option strategies that I want to share with you to close out today's video. All right, ahead of earnings, I don't think there's going to be a big earnings upside surprise, since we already know what basically earnings is going to be within 2%. And Marvell is not a stock that's very expensive right now on a valuation perspective. It's trading at about a 21 PE with an expected growth rate for next year at 40%. The question is that growth rate on the revenue side going to be correct? Or are we going to hear about any surprises on the upcoming earnings call that really could send it to the downside? I really don't see an option for an upside surprise. So that's why I'm going to be looking at possibilities of hedging my current position in the market. The options that we really have in front of us is the black swan hedge that we discussed, that a major trader put on, I think, to hedge their existing position. Really don't expect Marvell to fall to 40, but if something bad came out on earnings, this would protect that position or make you a good amount of money. If we had a sudden $10 drop in the stock down to 50, this option would go up in value very quickly after earnings. The strategy that I personally like the best right now is this covered call. Right now, we can sell the June 20 70 strike call for $1.75. This expires in 41 days. We capture the volatility from earnings, and I don't know what news could possibly come out during the earnings call that's going to move this stock up 20% in the next 41 days. That's really where your stock would get called away if you institute this strategy. But if you want to have a little more downside to protect your portfolio, you can combine the two into what I'm calling the free black swan hedge. Sell the 70 strike call and buy the 40 put against it. This will just give you a net credit of $1.45, which is still a great over 2% return for the next 40 days in your Marvell stock, but also protecting you on the downside in case something really bad gets announced over the next 3 weeks. Thanks for tuning in. Please let me know what you think about the direction of Marvell in the comments below. And as always, subscribe and like to this video. I look forward to seeing you next time. Till then, good luck with your trading.